Hello again, everyone. This is Chris Thomas, one of the mortgage experts. In this video, we will discuss refinancing a mortgage. What is a refinance? A refinance is when an existing mortgage is paid off and replaced with a new mortgage. If a homeowner currently has two or more mortgages, they can all be paid off and combined into one new mortgage. If the existing mortgage is kept in place, but the terms of the loan are changed, that is known as a loan modification and is not considered a refinance. There are two types of refinances. The first is called the rate and term refi. A rate and term refinance exists when the new mortgage is paying off an existing mortgage or mortgages that were used to purchase the house, or if the new mortgage is paying off an existing mortgage that is a refinance of a mortgage that was used to buy the house. With a rate and term refi, the borrower can get the lesser of $2,000 or 2% of the new loan amount in cash. Also, interest rates are lower for rate and term refis than they are for cash out refis. The second type of refinance is called a cash out refi. A cash-out refinance exists when the new mortgage is paying off an existing mortgage or mortgages, and the borrower is also taking out cash in excess of $2,000 or 2% of the new loan amount, or the new mortgage is paying off a mortgage that was not used to buy the house, or the new mortgage is paying off an existing cash-out refi. Interest rates are slightly higher for cash-out refis than they are for rate and term refis. Let's talk about subordinating an existing mortgage. If a borrower currently has two mortgages, but only wants to refinance the first mortgage, that is allowed. However, when the first mortgage is paid off, the second mortgage automatically moves into first lien position, and the new lender will not allow that. So, the lender that owns the second mortgage that is not being refinanced must agree to put that mortgage back into second lien position. That is known as subordinating an existing mortgage. They do not have to agree to do that. Everyone wants to know if closing costs can be included in a refi. The answer is yes, they can, for both types of refinances, rate and term and cash out refis. One thing that's important to know is that if the closing costs are included in a rate and term refi, it does not automatically become a cash out refi. It's still considered a rate and term refi. Let's talk a bit about streamline refinances. Both FHA and VA have rate and term refinance loans that have reduced underwriting requirements. There's no income verification required, although you must have a job, and there's no appraisal required. You must be refinancing an existing FHA or VA loan with a new FHA or VA loan to get a streamline refinance. The underwriting guidelines change frequently for these streamline refis, so it's always good to check with a competent lender before assuming you can get one. We are often asked what the process is for getting a refinance. It's very simple. The application process and the underwriting process for refinances is exactly the same as they are for a mortgage used to purchase a house. The only difference is that there is no seller or real estate agent involved. Only the borrower and the lender are involved in a refi. Who is allowed to sell refinance loans? Any mortgage broker can sell a refinance loan. However, if the refi is either an FHA or a VA loan, then the lender must be approved by the government to sell FHA and VA loans. Not every lender is. Always make sure that the lender you're dealing with is approved to sell government loans. When you're looking for a mortgage, you need an expert. If you're a real estate agent and you've ever had a deal fall apart, it's time to start referring the mortgage experts to your clients. If you're a consumer looking to buy a house or refinance an existing mortgage, you need expert advice. Call us, Chris and Debbie Thomas, the mortgage experts, and you'll get the advice and the mortgage you deserve. If you like this tip, check out all the tips on our website. Tell everyone you know about the mortgage experts and call us with any questions you might have.